All right. Hello, hello. So today we're talking about PMI on mortgage and how do we get it removed because PMI is temporary. So, first of all, what is it? Private mortgage insurance is used whenever you put down less than 20% as your down payment. And what it does is it gives your mortgage additional insurance in case you end up not paying or whatever the case is. It's just additional insurance to pay the loan servicer so that there's not so much risk with you only putting down such a small portion of your down payment. Most people do not put down 20%. And to be honest, it's not worth it to put up all that money up front to me to only reduce your monthly payment by as low as $30, as high as $180 a month. But when it is time to get it removed, let's talk about how we do that. Okay. So with private mortgage insurance, once you pay down and you are under 80% of what you currently owe, on the home, then you're able to get that monthly payment removed. Now, it's very important to talk about the differences between states because I'm in the great state of Texas, and California is one of those wonderful states as well. With private mortgage insurance, when you are under 80%, that is not 80% to what you originally agreed to. In Texas and California, it is under 80% of what the current market value is. So if you bought the home for 100,000 and it's currently worth 200,000, it doesn't matter if you still owe 99,000 on the home. You owe less than 80% of its current value. And so now you're able to remove that monthly payment. So other states, most other states, unless you have this particular clause in your mortgage statement, and you can look, and it's in there. I think I have one pulled up that I can show you. But in other states, it is 80%. You need to be under 80% of whatever you originally agreed to as far as the value of that home. So, and first I'll tell you how to do it, and then I'll show you the example. So, what you'll need to do to remove it, if you realize, hey, I'm under 80% of either the original amount that I agreed to, or I'm under 80% of what the current value of my home is, you call your loan servicer, you speak with them, and you tell them you want to remove PMI off of your loan, your private mortgage insurance. And what they will most likely do is email you or mail you to take as much time as possible. But they'll send you a form for you to complete, and it's agreeing that, hey, you haven't had any major damage done to your home. You're signing off on, that your home is in mint condition, basically, right? Like you haven't had a car drive through the front door and now it's no longer worth what you're going to say it's worth. So if that value is close, right? So if, for example, you're saying that you're below the 80% mark and they're like, I might be at 79% and a half, what they'll do is have you pay for an appraisal. And that appraisal will come out and they'll look at your home. And then what they'll also do is look at what homes are selling for on the market. If you're not sure if your home is at that 80% mark or under, just reach out to your local real estate agent. They can run that for you. Whoever sold you the house, whichever agent you are working with for that, can run a report and they can tell you, yeah, right now your home is currently valued at this amount. And so you should qualify because you're below the 80% mark. And if you know that and you're confident with that, then it's worth it to pay for the appraisal. The appraisals are typically about $400 to $600, depending on who that mortgage company decides to use. But you could end up saving yourself $400 to $600 a year or even more. So I know currently with my current mortgage, I don't have that statement to pull up because I cannot remember my login for that one. But I do have another mortgage open on an investment property, and I'll show you that one. It's not as significant, but it was also way, 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 way cheaper in price. So don't judge me. but I'm also going to get that PMI removed. So once you fill out the form that's required, you tell them, yes, I want this removed, and you submit it. They'll decide whether it needs an appraisal or not. If you are way under your value or way under what you currently owe based on your original agreed upon price that you purchased the home for, they're not going to run the appraisal. For mine, I waited 5 years because I didn't know on my first mortgage. And so I was way under what that 20% would have been, that under the 80%. And so they just took it off, no additional appraisal needed, because the value of my home was way more than what I originally agreed to purchase it for. And they just remove it, and then all of a sudden your monthly payment is less. They need less in your escrow account. If it's towards the end of the year, they send you a check. So I'm gonna show you. Let me get to the snippet first. So let's start here. So this is what's on my yearly statement, and it will show you mortgage insurance paid for the investment property was $445 for the year. Now I know that doesn't seem like much, but this one is only like, I think it's like $37 every 2 weeks is what the PMI is. But every penny counts. I mean, with that $37, I could potentially buy a 6-pack carton of eggs right now. Jesus. But with a year of that savings, I could probably buy 5 or 6 cartons. So for what I'm going to do, and I'll show it to you guys once I get it completed and I get that removed, that's going to save me $445 a year with my investment property. Now with my current home, I'm paying $129 a month in PMI on my mortgage. And I just reached, like literally January 19th, I just reached my 2-year mark, which is what they required, just to make sure all of a sudden you weren't in the middle of a seller's market where the home's value appeared high. They'll validate that your home is steadily above, your home's value is steadily above where you're saying it is, to make sure that they can take it off of your monthly payment. So I'm going to take that $129 a month gladly, and it will look something like this. So I'm going to show you guys the statement as well. Where is that statement? Because I want you to read it. I think this is it. Yep. This is the about private mortgage insurance for your loan. Let me shrink it so I can show you. So it talks about, if your loan closed on or after July 29, 1999, your right to cancel PMI. Now, for most other states, right, this is where it's telling you the date that your principal balance actually reaches 80% of the original value of the property. So most states have this. But if your home is in California, your home is in Texas, you have the right to cancel private mortgage insurance if the principal balance of your loan is 80% or less of the current fair market appraised value. And so that's the really, really important thing for Texas and California. We don't have to wait. For other states, you may have to wait closer to 3 to 5 years of paying that amount. Again, it's not significant, but those savings could get you a couple cartons of eggs. All right, if you have any questions about private mortgage insurance, please leave me a comment. If you did enjoy this video, please leave me a thumbs up. I need YouTube to start showing me some love, and they are not showing me some share love. So please give it a thumbs up if you like this video, and I'll talk to you guys soon.